Hello, everyone. The only two things in life that are guaranteed are death and taxes. And today, we are here to talk about the latter. Hi, my name is Olivia Pena, and I'm a food security specialist with Hunger Free Vermont. We're here today to talk about taxes around the Earned Income Tax Credit. It's a great program that supports working families in Vermont, and Earned Income Tax Credit Awareness Day is on January 25th, Friday. I would like to introduce my co-hosts for today.
Hi, I'm Zach Lees. I'm a staff attorney with Vermont Legal Aid, and I work on our low-income tax clinic, so I represent people in a lot of different tax situations.
Hi, and I'm Mike McClintock. I work at CVOEO as a VITA site coordinator, where we prepare taxes for people for free.
Great. So the Earned Income Tax Credit kind of brings together a wide variety of partners and stakeholders around Vermont who do work with working families and taxes. So today we'll all be sharing our input and how we're involved in this program. So you two are the tax experts. So what is the Earned Income Tax Credit?
Yeah, so the Earned Income Credit is the federal government's largest anti-poverty program. It is a refundable credit for low to moderate income working individuals, and you can claim that if you have children or even if you don't have children. The key point being that it's a refundable credit and you have to have earned income. So Mike, could you maybe elaborate on what a refundable credit is?
Yeah, so there's two types of credits, non-refundable and refundable. A non-refundable credit means if you have some tax liability, you can get a credit up to that tax liability amount. But if you don't, you can't get, if you have no tax liability, you can't get a refund. A refundable credit means even if you have zero tax liability, you're eligible for this credit, you actually will get money back from the government to help out.
Right. So I think some people think that, you know, I don't have a requirement to file taxes this year, so I'm not going to, even if they've worked a little bit, but for whatever reason their income is below the standard deduction, which would mean that they don't really have a requirement to file taxes. So what you're saying is, even if you don't have a requirement to file your taxes, if you can claim an earned income credit, then you should certainly file your taxes to get that credit.
Yeah, absolutely. In particular, this year, the standard deductions have gone way up. So a lot more people won't be technically required to file their taxes, but it's going to be to their benefit to do for the earned income credit or just to get their withholding back.
Certainly. And I think the other misconception that people have is that you have to have children in order to claim an earned income credit.
Yeah, absolutely not. The refund or credit is quite a bit lower if you don't have children, but it's still substantial.
Certainly. So one of the things that people think about when they're claiming an earned income credit is how much can I get back? And we have a slide on what the maximums are here. And the first thing we'll look at is how much you're going to be, there's income limits, right? So you can work and earn income up to a certain level and claim children, or you can work up to a certain amount and claim no children. And you can see that if I have two qualifying children, I can work and earn income up to about $45,802 if it's just me filing a single return. So you can see that there is a wide range of income limits here, right, Mike? Like, so I can earn from $0 up to $54,000 or more if I'm married filing jointly, right?
Yes, absolutely. Yeah, all depends on the number of children you have.
So one of the messages that we'd like people to take away from this is that the earned income credit is not just for really, really low income people, but also for moderate income people as well, especially if you're married filing jointly and you have, you know, 3 or more qualifying children. So can we go to the next slide? And we can look at kind of the maximum amounts of earned income credits that you could get back. So as you can see here, you're looking at a maximum of over $6,000 if you have 3 or more qualifying children. Whereas if you have no qualifying children, but you still earn some income in tax year 2018, you could earn up to $519. So the next slide kind of shows the spread of earned income credit. And you can see that it's kind of like a bell-shaped curve, meaning that as you start to earn income, the credit amount is relatively small. At a certain point, the credit amount kind of levels out there at the top. And all of these credits amounts kind of fluctuate depending on how many children you're claiming and also the status, the filing status that you're choosing. So, Mike, can we talk a little bit about the filing status that you choose and how that may impact your ability to claim an earned income credit?
Yeah, so there's a number of filing statuses. The only one that you can't claim this credit for is if you're married filing separately. All the other ones you can claim the credit.
Excellent. So let's look at some of the other requirements for an earned income credit here. So the big thing that I think people get confused about is when they have children, or their spouse has children, or their partner or uncle or aunt has children, and when you can claim a child. And we call this qualifying child. And to do that, there's a couple different tests. The first one is the qualifying relationship test, and you can just leave it right there. So, Mike, can we talk a little bit about the qualifying relationship test and what that means, just kind of generally speaking?
Yeah, so there's, and honestly, I usually have to take out our manual when we go over this because it can be complicated with a number of living situations we encounter.
And we'll get to that kind of later on here.
But basically, if it's your child or your brother or sister or descendants of them, then they typically would count towards their relationship.
Right. And I think one of the important things to point out there is that I believe that cousins are not a qualifying relationship. Right. Is that right?
Yeah. Or parents. Yeah.
Or parents, right. Yeah. So you can claim down, or you can claim across. So if my brother or sister meets all the other requirements, then that relationship being my brother or sister would count. But I can't claim a parent above me who's older than me. So let's look at age now. So a child must be under the age 19 for me to claim that child. If it's a student, then it has to be under the age of 24, and there is an exception if that child is totally and permanently disabled. There is no age limit there. So generally speaking, you want to look at the age of the child that you're looking to claim. Usually the magic number is 19 years old at that point, or 24 if they're a full-time student.
Correct.
Great. Are there other eligibility requirements? Yeah,
so one of the other big ones that we spend a lot of time looking at is the residency requirement. And Mike, can you elaborate just on the residency requirement generally?
I believe the rule is you have to live, the child has to live with you for at least 6 months of the year in order to be eligible for the credit.
Right, and the term that we use for that is the custodial parent. And you'll hear a lot of different terms being thrown about, but custodial parent refers to where did the child sleep that night. And what we look for is, did that child sleep at your residence for more than half of the year? So you need to be able to show, if the IRS asks you to, where that child lives. And that can be very complex in certain living situations, or you know, if there's custody arrangements that have the child moving or sleeping at different places. So keeping track of those numbers is really important. Excellent. So let's go to the next slide here. And we're looking at the people who are going to be claiming this credit. Generally, there's an age requirement that you have to be over the age of 25 to claim an earned income credit, and you have to be below the age of 65. You can't be the dependent of another taxpayer. Mike, do you want to
And that's only if they don't have any children.
Oh, correct, yes. So if I don't have any children, I want to claim this earned income credit, and I have worked in tax year 2018, and I want to claim that credit for myself, I don't have any qualifying children that I'm claiming, then I need to be at least 25 years old and under the age of 65. The second part is I cannot be the dependent of another taxpayer. And Mike, does that apply to both for claiming a qualifying child?
Yeah, right across the board.
Across the board, okay.
Yep.
So for claiming qualifying children, as well as if I'm claiming that credit for myself, I cannot be the dependent of another taxpayer. So this is really an important rule for people who live with a grandparent. So if you have a grandparent, a parent, and a grandchild, there can be some confusion about who's going to be able to claim that grandchild, right? And if the parent of that child can be claimed by the grandparent, you can see how things get confusing. Generally, though, if I'm being claimed as a dependent, I can't claim the earned income credit. And then the other requirement is you must have lived in the United States for more than half the year. And you should have some documentation to show that as well. So let's move on. So here's some contact information. There's a couple things that I want to point out here. I believe for IRS Form 1040A, you cannot use that form to claim a qualifying child as part of the earned income credit.
Yeah, actually this year they're getting rid of all the extra forms. It's just going to be 1040.
That's right. That's right. So, and one of the other important parts that we're looking at here is that in 2018 we have a new tax code, and there's a bunch of different changes which will affect a lot of people. Yep. So now we just have one 1040?
Yep.
Yeah.
Great. Well, on the topic of IRS, are there different criteria between the Vermont EITC and the federal EITC?
It's a great question, Olivia. Generally, if you qualify for claiming the federal earned income credit, you will qualify for claiming the Vermont earned income credit. And Mike, can you talk a little bit about the Vermont earned income credit and the amount that you could potentially get back from the state of Vermont?
The Vermont income credit basically goes right off the federal one. So whatever you got for federal, it's 36% of that is what you're eligible for the Vermont. That's up about 4% from last year.
Excellent. Yeah. And one of the other key points to that is if you qualify for claiming the earned income credit federally, and if you claim the earned income credit through the state of Vermont, then you'll also have a streamlined eligibility for 3 squares or food stamps, right? So,
yes.
Olivia, if you wanted to kind of expound on that a little more.
Sure. So the 3 Squares Vermont program is a federal nutrition program known as SNAP nationally and was formerly known as food stamps. So this program is based on income limits. And a family can qualify, or an individual can qualify if they're under the income guidelines. So families who qualify for the EITC credit but might not qualify for 3 squares receive an automatic link once they receive this credit through categorical eligibility. So at that point, families can then receive 3 squares benefits, and then there's a whole a range of benefits that they can receive after that, such as free school meals for their students and other great federal programs.
Cool.
Yeah.
So one more reason to look into the earned income credit and see if you qualify.
Certainly.
Excellent. So we'll go to the next slide now, and now we'll start to look at tax preparation help. And this is kind of your wheelhouse, Mike. Can you kind of explain what VITA is and how people can access that?
Certainly. So VITA stands for Volunteer Income Tax Assistance. It's essentially you can come in and get your taxes done for free. So there's, as long as you're eligible. And the eligibility requirements are pretty much if you make under $54,000, there's no income from farm or from rentals or foreign sources. We do relatively simple self-employment, nothing too complex there. And in terms of Vermont taxes, we do just the state of Vermont. We don't do any other states.
But people can go get their federal taxes prepared there as well.
Absolutely.
Yeah.
You can get the federal taxes in the state if they're from Vermont.
And who can access it?
Okay, so as long as you meet those guidelines under $54,000, anyone's welcome to do that. So, and to do that, they just call 211. It's like option 5, and they'll go through the screening questions to make sure they're eligible. Then they'll set an appointment with our office, and then they'll tell them all the things they need to bring, and they'll email and text them a list of that stuff they need to bring. The most important things they need to bring is their Social Security card and photo IDs. We're not allowed to e-file them unless we see those. You know, there's a lot of identity theft out there, and we want to make sure we get the right person and no one's trying to scam us. So we bring that, their bank information, so that we can do a quick e-file and get direct deposit. They get their returns back very quick that way, and then just all their tax forms.
Excellent.
Yeah.
How long does that normally take for once you schedule your appointment and go in?
Yeah, so the process once they get there is they come in, they fill out some forms just so the preparer knows what they're going to be looking at. They go through, interview with the volunteer. The volunteer will prepare the taxes. Someone will actually review the taxes. We always put 2 sets of eyes on every tax return to make sure there's no little typos or anything. And then once that's good, they review it, and that typically all takes an hour or less.
Excellent.
Yeah. Great.
Okay, so I think now what we'll talk about is some of the issues that we see on the back end. Oh, so we've got one more slide here about VITA sites throughout Vermont. I believe there's over 80 VITA and other volunteer tax preparation sites through Vermont.
Yeah, from what I understand, there's a lot, yeah.
So, and you run the one in Chittenden County, correct?
Yeah, and with a lot of help so we have a lot of volunteers. I got over 40 volunteers this year, which is a lot, and Champlain College has been a huge supporter of this program for quite a few years, so they supply quite a few students. I'm also getting some from UVM and St. Mike's, and then a whole bunch of community volunteers. It's a really good team.
That sounds like really valuable experience for the students.
Yeah,
while
absolutely.
Doing their part in
Absolutely.
helping out their
Gets
community.
their eyes opened a little bit, yeah.
Awesome.
Cool. So if you'll check this slide out one more time, call 211 for an appointment, and you can also visit the IRS website to find VITA sites throughout Vermont, not just Chittenden County, but across our state. So you shouldn't be guessing about preparing your taxes. You should call 211 and see if you qualify, and then go to one of those VITA sites and get some help doing so.
Great. So after someone goes through this process and gets help with their taxes, with their tax preparation, what are some issues or challenges that might come up after filing?
Yeah, so I'll say in most cases the return's filed, the return is processed quickly, and most people will receive their returns in a pretty quick turnaround time. Now, there is a law that states that for returns that claim an earned income credit, there's a little bit extra scrutiny that go with those, and the fastest those can be turned around is February 15th. Usually it's more like February 27th. I would also say that because there's a new tax code and there's questions about government funding right now, then you can expect maybe a little bit more of a delay, which is important because I think a lot of people really depend on that earned income credit to pay for important things, and I'll get to some of that later. But so my program, the Low Income Tax Clinic at Vermont Legal Aid, we provide legal representation for tax issues, and usually that happens on the back end after people have prepared and filed their taxes. So what we wanted to do here was kind of talk about some of the issues that we see pretty frequently with earned income credit. And I'll start by just saying that with the earned income credit, there's a higher error rate because the eligibility standards change and the rules are very complex. So there's also a higher audit rate that goes with that. So what the IRS will always do is they will send you correspondence about your return, and you'll see they'll either say your return has been frozen so we can take a closer look at it, or we're auditing your return and we request these sorts of documents, or we're doing an examination and we want you to get back to us. So the most important point there is if you receive any correspondence from the IRS, you want to open that up and read it immediately and read it really carefully. And usually you can call the IRS and ask them what they want, and that should be the first step for people. If that doesn't get you any traction and you're not getting a response that you like, there's two other options now. One is the IRS Taxpayer Advocate Service, and there are local taxpayer advocate services. One is in Burlington. I believe there's another office in Montpelier, and they have their own contact information, which we can give as well. And that Taxpayer Advocate Service is a separate division from the IRS. So those are IRS employees who are dedicated to being advocates for taxpayer rights, and they can assign an advocate to you and give you contact information so you have a point of contact. They can expedite things if you really need that return or that refund back. And it's a great service that will help you hopefully solve some of these issues. My program, the Low Income Tax Clinic at Vermont Legal Aid, we do very similar work as the Taxpayer Advocate Service. However, we provide legal representation. We can be a bit more hands-on about helping get you the documents needed to be successful in an audit. And if we get a bad decision from an audit, we can actually represent you all the way to the United States Tax Court, where a judge will actually hear your argument about why you think you should get the credit or the refund that you think you deserve. So those are the two resources that we would direct people to, and that is on that slide right there.
If I could just make one comment. He said you would get a letter from the IRS, and that is really the only way you should respond to the IRS is if you get a letter. Last year there was a lot of phone calls and saying they were the IRS, but the IRS will never call you. So if someone calls you, hang up, it's a scam, but you need to respond if it's a letter.
Yeah, certainly. So once again, the IRS will only respond to you through correspondence, which is a great point to make.
What are some other areas of confusion?
Yeah, so maybe the first thing we can talk about is you know, the requirements for claiming a dependent versus claiming a qualifying child for earned income credit. Yeah,
so those laws are, like Zach said, can be very confusing. So it's, you know, when we have the tax prepared at our location, we take very good care to ensure that someone is indeed a qualifying child versus a dependent, because you could have a qualifying child that isn't a dependent. That's more rare, but it can happen. So it's important we go through the step-by-step eligibility requirements to make sure that they're indeed eligible.
Right, and you know, I think one of the important points about that is that if the IRS chooses to examine your return, then what they're going to be looking for is documentation to prove the age test or the residency test or the substantial support test. So, you know, for a lot of people in situations where maybe that child has a custody situation where they're not in your place full-time or not living with you full-time, you're going to want to keep track of the number of days that that child is living with you. And just think about what kind of documentation you're going to need to get together, because the earned income credit, if you claim that on a refund, that has a higher chance of being audited or examined. Another situation we see is with divorced parents. Do you have any experience working with people?
The biggest thing we've seen there is two different people are trying to claim the same child. There's rules around that, which person can or can't, but unfortunately if someone did, the next person's going to have to end up paper filing their return, and then the IRS is essentially going to sort it out with the two taxpayers.
Right, and that would be a great time to then call Vermont Legal Aid or the Taxpayer Advocate Service, because we can help you through that process. One of the other issues we see is, you know, there can be a custody agreement which says that one parent can claim a child for tax purposes, even though that child is living for more than 6 months of the year with the other child. The custody agreement does not control. The IRS has their own rules about what a qualifying child is. So even if your custody agreement says one thing, you really want to double check those rules and make sure that you're eligible to claim the child. Another thing that we see pretty frequently is a relative who's not the biological parent or the parent of the child claiming that child.
Right.
And there's a whole bunch of tiebreaker rules that are also really complex, and we don't need to get into the weeds with that right now, but when you do tax preparation, do you go through each step of that process to determine? Yeah.
Absolutely. We try to determine who's in the household, who could possibly claim them, and then if there's any issues, we look at the tiebreaker rules to determine who is actually the person that can claim them.
Cool.
Yeah.
Great. What questions do you see that come up a lot during tax preparation?
So I actually wrote a couple of these down, and these are, you know, we don't need to get too far into the weeds, but maybe we can see if we can wrap our minds around this very quickly and see if we can have some answers for people. So a frequent one that I see is, I didn't work in 2018, can I still claim my daughter? And for earned income credit purposes, the answer is...
Right, you have to have earned income.
You have to have earned income. So, but people get confused there because there might be some other refundable credit or you know, some other tax exemption which you could potentially claim even if you're not working. But the earned income credit, you have to have earned income. So if you didn't work in 2018, then you can't claim a child for earned income credit purposes. Another question I see a lot is, if two unmarried parents live together all year and they have two children together in the same household, can they split up who claims which credit or exemption for each of those children? So like, can one parent say, I'm going to claim the dependency exemptions and you can claim the earned income credit?
Yeah, no. Typically when you claim someone as a dependent, there's like 6 major credits that go along with that. They could each take one child for those credits,
right,
but they couldn't divvy up the credits among themselves.
Right, and I think that's an important distinction that people sometimes get lost on. Yeah. And then, you know, we talked about this a little bit, but if you have a parent and a daughter who live with a grandparent as well, who gets to claim the granddaughter is a question that we see a lot, because you know, we see a lot of people who, you know, live with extended family, so there's all these questions about who can claim who, and that's a pretty complex situation, right?
Yes, definitely is.
Yeah, so, and I would say it's a really fact-specific situation, and it depends on a bunch of different issues, which we don't really need to go through totally all today.
Yeah.
So on a more bigger scale, looking at the big picture, why is the earned income credit so important?
Yeah, I mean, I think one of the reasons I think it's extremely important it is the federal government's largest anti-poverty program. It is a credit for low-income and moderate-income people to get some money back at the end of the tax year, and people really rely on this refund to pay for back rent or pay for utilities or pay for medical bills and things like that.
Yeah, you look at the income of some of the people doing this and you see the size of the refund, and it's really what gets them through the year. So.
Yeah, and one of the points that I wanted to make on this, and this is kind of a pitch for both the Taxpayer Advocate Service at the IRS as well as my program at Vermont Legal Aid, is if you know that you owe the IRS money from a previous tax year and you go to file your taxes this coming year and you really need that refund to pay for an essential service or an essential bill or something, what's going to happen is usually the IRS will automatically scoop your current year's return or refund and apply that to the back taxes that you owe. However, if you can prove that you have a serious financial hardship, then what we can do is try and get you that refund using a process called an offset bypass refund. The crux of this, though, is that you would need to make this request at the time that you file. As soon as the IRS assesses that tax that you owe or the refund that you would have gotten on that current year's return, we can't get it back anymore. So it's really important for people who know that they have an IRS debt. And it's really important that they call Vermont Legal Aid or they call the Taxpayer Advocate Service at IRS because we can really do a great job in getting that refund to you to help pay for a really essential service before it gets applied to your back taxes.
Great. And again, I would just like to mention the connection that the Earned Income Credit provides working families that allows them to have access to the 3 Squares Vermont program, which can help families put more healthy food on their table and also provide their children with free school meals at school, which helps improve academic performance, focus in the classroom, and all these other great benefits that come along with 3 Squares Vermont. So information about 3 Squares Vermont can be found on vermontfoodhelp.com.
Excellent. So my takeaway would be if you've gotten any correspondence from the IRS, give us a call at Vermont Legal Aid or call the Taxpayer Advocate Service at IRS, and let's find out if we can do something to help you out in that situation. And
and if you want to know if you can get your taxes done for free, which many people can, just call 211 and they'll take you through the process.
Great. Well, happy tax season.
Yeah.
All right. Thank you.
Thanks.